Hey there, I'm John Stevenson, the Guaranteed Retirement Guy. And are you thinking about retiring? Well, let's talk about the benefits of an immediate annuity. So with immediate annuities, they're immediate. It's immediate income. So let's say you're retiring next month. Did you know that you can actually get lifetime guaranteed income for the rest of your life and your spouse's life if you're married from an annuity? And you can start in as little as 30 days. So I'm going to share my screen. I'm going to show you exactly what's available right now. And the numbers will be different because your age will be different. You might be married. Maybe you're in a different state. But at least this will give you an idea of what current immediate annuities are paying right now. Okay? All right. So let's look at first the fixed index annuity with the income rider attached. The income rider is a tool used to give you the most guaranteed income possible for life. And so I'm basing this example off of a client in Nevada, 64 years old, and they're putting $500,000 into an immediate annuity that's going to start paying out next month. Okay? And by the way, this client is single. So because this client is single and he's a male, it's going to pay out more than if he were a female and single, or if he was a male and he was married. Just because the insurance company is only on the hook for his life, they're not on the hook for him and his spouse's life. And of course, if that person is a female, the insurance company knows that they are going to live longer, and usually those payments are a little bit less. So let's just look at this example and we'll compare. So at age 64, if he was going to put $500,000 in, you can see right now that F&G is paying the highest amount of immediate income. And so if he were to activate this income in 30 days, you're looking at $39,000 per year for life. That's pretty good. So if he takes that out over, let's say 10 years, that's $390,000. If he takes it out over 20 years, that's almost $800,000. And then he could take it out for 30 or 40 years. It doesn't not matter how long he lives. This is guaranteed for life. Now, the question I get often is, well, what happens if I die before the money runs out? Okay, let's say I put $500,000 in here and I live for only 3 years. I die. Well, what happens to the money? Well, the account balance just goes to the beneficiaries. So I will show you exactly what that looks like. So let's say you were to put $500,000 into it and you died a few years later. And let's say that the index had no growth whatsoever. Well, here is the worst case scenario. The worst case scenario is, let's say you die at age 67. Okay, you've taken out income for 4 years. You've taken out roughly $160,000, almost $160,000 per year. At this point, you can see the death benefit after 3 years is $320,000. So that looks like that's what would go to the beneficiaries. Now, that's with no growth, okay? Let's say it gets a little bit of growth. Well, then the death benefit's more. You can see at the end of 3 years, he's taken out $160,000, and the death benefit's like $350,000. And so that's how that works. So the money's still yours. It still goes to your beneficiaries. You don't have to worry about the insurance company taking it. But if you're looking for the maximum amount of income for life, you can see just with F&G, if you take that income out to your 93 years old, you're going to take out almost $1.2 million from a $500,000 investment. That's not bad. And you live longer. Lots of people are living a lot longer, whether you want to or not. You're just going to keep taking out income. So you live another 10 years, you're going to take out another $390,000 in guaranteed income. So that is for an immediate fixed index annuity. A lot of times people reach out and they want a SPIA. A SPIA stands for a single premium immediate annuity. Well, let's look at that. We'll compare apples to apples. So we'll say premium, $500,000. And we want to make sure there's a cash refund. So if we don't use all of the money, let's say we die in 3 or 4 years, we want to make sure that whatever's left goes to our beneficiaries. And so based off of that, we want income to start immediately. Let's see what's available. Okay, so you can see all the different companies with the different SPIA amounts. And these are immediate income starting next month. So just like the fixed index annuity that was giving you $39,000 a year, you can see the monthly income for this is $28.30. So let's see, $28.30 multiplied by 12 months, that is $33,960. So we'll just round up and we'll say we're getting $34,000. Well, that's not bad. $34,000 a year guaranteed income, and then whatever's left if you pass away goes to your beneficiaries. But the income's less. Instead of getting $39,000, you're getting $34,000. So that's a $5,000 a year difference. That's quite a bit less in monthly income. Let's take a look at, change this up just a little bit, and we'll say, okay, we want it for a certain period. Okay, that's popular for SPIAs. So we'll say we want it for at least 20 years. Okay, so now I want that income not only to come to me personally, but I also want the income to continue to anyone that I specify if I pass away before 20 years. Okay, so we'll say same $500,000, but now the period is certain for 20 years, meaning it's going to pay out for 20 years guaranteed, regardless if I'm living or not. Okay, so if we look at that, that's giving me $27.85 per month. So $27.85 multiplied by 12, that's $33,400. So that's not bad. It's pretty close to the other one, but at least we know that if something happens to us, we know it's going to continue to pay out to our beneficiaries for the rest of that period. Okay. So, but here's the thing though. What if you're married? Okay. Let's take a look at that, because most people that reach out to me either want it for themselves. They want as much income as they possibly can for themselves, so they usually will pick a fixed index annuity with an income rider, or they're married and they want to make sure their spouse has income for the rest of their lives, because they don't want it just to be a period certain for the remainder of the period, but they want it for the rest of their spouse's life. Okay, so let's take a look and see exactly what this would look like. So my spouse is 64 years old as well, and she is female. So we'll just say, all right, so we want it for my life and for my spouse's life, and not just for 20 years, for the rest of both of our lives. So if I live 20 years and my spouse lives 35 years, I want to make sure that income continues to them. All right, so in this instance, you can see Sentinel Security is the highest payout at $34,385 per year. So that's pretty good. If I break that down to monthly, that's $28.65. That's still pretty good. And you notice Annuities is paying $28.44. SPIA is paying $28.33. F&G is right underneath them at $28.17. And you got all the rest of the carriers. And so this is a great option if you're married and you want to make sure that income continues for the life of your spouse. Now, if my spouse is older, it'll be different. If they're younger, it'll be different, because the insurance company, looks at the mortality tables and they know how long we're going to live, and they want to make sure that they don't suffer a loss. And so they want to provide that guaranteed income for you and your spouse, but it also has to make sense. And so that's really, when it comes down to it, if you want to look at what the income would be for you, and if you're married, what it would be for your spouse, then at this point, it might make sense booking a call with me. There is a link below this video. It goes directly to my calendar, and we can talk together. We can see exactly what you're looking for. I'll answer your questions and show you everything that's available. And then at that point, you can decide what you'd like to do, and I could certainly help you set that up if that's something you're looking to do. So anyways, I hope this was helpful. I appreciate you watching, and we'll see you next time.